Think of it like you're in a sailboat, and this sailboat has a navigation system, and this navigation system needs to have an efficient way to get there.
So you talk about this tax flow mindset. Can you take us that a little bit more? I mean, I think about taxes, but what should I be thinking about? Because I don't think about it a lot. Like I don't think about it as much when I'm thinking about cash flow or I think about flipping a property. I really just look at the number. Oh, I make this much money. That's great. But I feel like I'm lacking in that mindset, that tax flow mindset. Can you take us in? How do I get better at that mindset, the tax flow?
Well, I think the first thing would be, knowing that your tax flow is connected with your cash flow and vice versa. If this currency is flowing, right? And if you don't have a team and you don't have the strategies to make the currency of cash flow efficiently into your tax flow game, then you're leaking, right? You're leaking and you're paying a lot of tax. And let's give you a couple of deal stories. So we work with commercial real estate operators that buy multifamily properties. And for the longest time as the GP, they would just sell and just everyone would pay their tax and they would all show up and come back together for the next deal. So we started with a $20 million asset of theirs. And they go, Brett, we do about 3 to 5 of these every year. One was 20, one was 16, one was 33, one was 48. And every time they were exiting their GP positions, they believed they weren't able to defer the tax because they were not going to do a 1031 exchange, right? They like to buy a property at 12 million and sell it for 20 like 3 to 5 years later, right? And
Mhm.
they didn't necessarily want to go buy another big deal, or they couldn't find a deal. So the point
Yeah.
was they
And
were leaking
there's
on
all the
their.
restrictions with the 1031
Yeah.
too. It's like, oh, you got to find it in such amount of time, and it's a lot of pressure. And what if
Mhm.
you don't find it? And yeah, a lot of
Exactly. So
paperwork.
that's the first thing. So for them, we've done 5 exits over 120 million, but now theirs were just the GP smaller percentages. So that's the first thing. Like, it doesn't have to be $100 million deal or $50 million deal. Their positions were 750,000, 2 million, 1 million. I think another one was like 3.5 million. So these are small GP positions, not small, but I mean, in the consideration of like a 40 or 30 or $20 million deal, it wasn't necessarily huge, but it was substantial for their tax flow game because what did they do? Immediately they invested it back into other deals that
Yeah.
they otherwise would have to go get debt. And so we're so focused on working with lenders to get good debt, or we're so focused on raising capital over here from someone else, or to give up GP interest or LP interest, when a lot of it could have just been the excess that we could have deferred, right? That we could have
Yeah.
reinvested. So that's the first thing. The second thing is to understand depreciation schedules. So part of the reason to own cash flow producing assets is to have what's called depreciation to offset the cash flow. Now we're really familiar with this with like cost segregation or bonus depreciation or even just straight line. Now, if you're doing fix and flips, it wouldn't necessarily be applicable, right? Because you're doing it
Mhm.
so quickly. But for those that are owning assets for 3, 4, 5 years, you're going to want to look at ways to depreciate so you can offset that cash flow. Well, guess what? There's a lot of assets that are not depreciable, like stock, cryptocurrency, or even businesses that are startup that have no depreciation schedule because they're just like, intellectual, mostly goodwill. So when you can exit that, defer the tax and put it into something that's not only cash flowing, but has depreciation, like a multifamily asset that's a 27.5 year depreciation schedule, of which you can do cost segregation, all of a sudden you're unlocking all of this extra, I guess, fuel, if you will. Think of it like you're in a sailboat, and this sailboat has a navigation system, and this navigation system needs to have an efficient way to get there, right? And if you don't have an efficient way to get there, you're going to be wasting a lot of the gas, a lot of the efficiency, and that's really the key thing. Is to the tax flow mindset is how do I effectively and efficiently, and I don't even say be a good steward with your wealth, because taxes are the most expensive thing we're going to pay in our entire life, right? So how can I be a good steward with the wealth we've been either given and or we've helped create by working hard? And you've got to have that tax flow mindset. So hopefully that gives you the inspiration to start on that, Brett.
Yeah. No, I love that.